Welcome to TradeTheMBA.com. This is John. This report is for the 15th of May, so halfway into it, and we've pretty much gone absolutely nowhere. But we did hit that 61%, and sure enough, they popped right in at that point and started. And it was actually a pretty good-sized day. There was a lot of activity because there were plenty of sellers, and in that selling, all of a sudden, you had buying at just the right moment to propel things. So we've got a full decline in our shakeout now, which means it's getting completely reset at the highs. So this is a very critical thing to see when it takes place like that. Now, can we still see some downward momentum? Potentially, but with that steel reset, if we don't get a pop back up of orange and a rejection of it, I think that you're looking to break out into new higher range is what that's pointing to. And again, NASDAQ was much stronger if you look at it from the ABM. Supported actually off the magenta and just in between that and the white, but clearly within a generally weak configuration, except for that complete reset of short-term buyers, which when you look at it from a Fed standpoint, they just supply money to their buyers who then just pick it all up. Yeah, it's not even worth talking about the euro. It's not going anywhere. The real story, though, is the oil and this steady build, which is something we talked about when we knew that it would take a little while for the U.S. to actually be able to buy up the supply for the petroleum reserve. Looks like that's taken place. We're now baselined in with this previous levels. The question now is whether or not there's an intentional increase in supply at these levels, or they're going to wait for it to rise a little bit further. And that becomes critical because the more oil rises, we know the impact that has on inflation. And the giddiness about talking about negative rates is only going to mean this, which we expected, which was gold, moving to new highs. There's just no way around it. People are going to be looking for a reserve against inflation. I don't know that that's short-term situation, but as we've talked about from gold way back, there's a long-term prospect that eventually that will lead to an increase simply because of the devaluation of general fiat currencies. So the day started out, we were heading down, and like we said, we got down towards that 61% on a daily, and we started to get the buy signals from that particular point, and really started to push right back up. And then it became just a back and forth game, up and down throughout, but every time there was a dip, captured support, and then it boom, just kept breaking it to new highs. And each of the different levels, we actually broke into some much lower ones, which was interesting, and then we got right back to the consistent ones, which were the 28.17, 28.30, and as soon as we were above each of those, that just brings in new buyers and support and forces the short covering, because it becomes the threshold that is known amongst the algos as the baselines for support. And then you can see when we get to some of these tighter ones, we just kind of range trade in between them. And that's where we're just looking for us to continue to move across those lines. It's just a matter of looking for them and waiting for us to see the breakouts and the fills, because even as you see the positive extremes that took place, we get the returns right back to them, and then the support coming off of it. And that's generally, I think, what you can expect for, the foreseeable future, because there really is no other game in town now. We're starting to see some states opening up, but then you get the disparity, and this is something I talked about, the inequality of when different states open. Florida announces, hey, sports, you want to come here, do whatever, fine. But that doesn't do you much good when Florida is the only state that, you're going to have teams from other cities coming. So yeah, they can begin to do some things, but without interstate commerce, without countrywide commerce, and the ability to move freely, it's a disaster waiting to happen. And I think that you'll start to see that unfold, because businesses will commit capital and attempt to expand things, but it's going to be limited as to how far they can go and what they can do with it. And that's going to cause the fits and starts and probably more economic pain than good. Without a uniformity, I think they're just from an economic standpoint missing the boat. But you got to do something. So if you can't compel everyone to open up, and you've got to mitigate certain areas, then you can expect that this is going to be more problematic. I think that potentially Trump's expectations of third quarter rebound and stuff like that are probably a bit too optimistic given the slow nature of the turnaround at this particular time. So certainly isn't going to be any change in Europe here. I mean, something as simple as like even still me trying to get my additional internet because they've decided to slow it down for equality purposes and that. It's a nightmare. And even the restaurants and things that are opening up back here, same problem. You got no tourists. It's pretty hard to sustain a large number of restaurants or any kind of activity that will generate a sustained growth rate. So that means artificial money and revisiting what kind of happened after the 2008 crash. So that's the general plan, is to stick with knowing what we know, and that's that you don't fight the Fed. And as long as the Fed's going to keep buying up everything, look for those dips, and you can wait for the buy signals to come off of them, and it's going to be a nice run up. So as always, though, we will continue to update things, and hopefully limited internet issues would be nice, and we'll get everything put up on the Skype chat. Trade well. We'll talk to you then.